Top three things in my notebook this morning. Number one, Japan. Number two, emerging markets. And number three, our favorite, commodities. So first on Japan, look, the BOJ did not deliver the bacon. If you were looking for some kind of an extra, 10, 20, 30 trillion yen in stimulus, you didn't get it. In fact, I can read, and I quote from Kuroda, "We are not considering any kind of additional easing now." So Nikkei down 3.1%, by the way, in the last 2 days. Yen obviously went up on that. Follow the Hedgeye playbook. If the yen's going higher, the Nikkei is going lower in the face of Japanese growth slowing. And yes, we remain short of Japan in Japanese terms. Now, second point would be emerging markets. What do you buy if the current bubbles are blowing up? You go back to buying the prior bubbles, right, Darius? You got emerging markets in the bag. You got Brazil up 2.1% yesterday. This was a fascinating move. The Brazilian real was up over 1% on the day. The Brazilian stock market was up over 2% on the day. And Brazil's actually back to positive for the year to date after coming back from the thralls of hell. So again, if in fact we go back to buying every one of the former bubbles, and again, that would include gold, bonds, and emerging markets, that's the playbook, as scary as that might sound. Finally, commodities, just again, you go back to buying the bubble that blew up for 3 years, which would include everything commodity related, corn, gold, fully loaded. If that's all you own year to date, by the way, you are killing it. So again, inflation accelerating was our Q1 macro theme. We're going to double down on that today on our Q2 macro call. We're going to call it structural inflation in terms of the parameters that we're going to explain there. That you can dial into that at 11 o'clock. And those are your top three things.